Do you think the combination of higher oil prices and high rate hikes could up the risk of a recession in the latter part of this year? In fact, I'm looking at the U.S. economy with 7 rate hikes this year by the Fed to stall out in the second half of the year at about a 1% rate. That's not enough to keep the unemployment rate from rising again. And I think that's a very important distinction to make. It's a semi-hard landing. It's a recession in everything but name only, in that we don't actually see a contraction in growth. But it is really different. It's remarkable how resilient the U.S. economy has become to higher oil prices. We've seen that over the last decade, and I think that's very important. It is because we are driving more fuel-efficient vehicles, and we are better at how we handle oil than we were in the past. That doesn't mean, and as Steve pointed out, we also produce more oil. That said, not many people are employed in the mining sector, and I think that's a really big problem, too. But it really is the 1-2 punch of rate hikes and higher oil that get you into a recession.
Diane, we can sit here all night and enumerate the problems that we're going to be facing. They are considerable. But we have a few assets. Unemployment, 3.9%. We did 7% growth in the fourth quarter. We have an economy that looks to be getting back to normal. I don't want to jinx it. People are going out doing their thing. My band keeps getting booked all the way through October now at this point, which I think is a major economic indicator.
Congratulations,
Thank
Mike.
you.
Steve.
But how does all that play into this issue that you talked about, which is resilience, the resilience of the economy? I would sure rather be hit in a stronger position than in a weaker one.
Well, that's exactly it. You know, the resilience is sort of a blessing and a curse. It's a blessing because we can weather the storm a little better. It's a curse for the Fed because it puts more weight on the Fed's shoulders to actually raise rates. And the fine line that they're walking is not just the series of rate hikes and being cautious. That is certainly something to do, and we've got these volatile markets. But the real issue is they don't want the markets doing the job for them, and that is a seizure in credit markets. If we were to see some kind of a seizure fall out of this, where a developing economy defaults other than Russia on their debt, that could spill over on our own shores and be much more costly, as we saw 2008, 2009. Financial crises are not the way you want to get to a recession, as opposed to a Fed-induced slowdown that we could recover out of. And I think that's the fine line that the Fed is walking.